Every filing season, thousands of divorced parents both claim the same child, and both returns collide at the IRS. Here's the part that shocks people. The divorce decree that says dad claims the kids in even years? The IRS doesn't follow your decree. It follows its own rules, a night's counting rule and one specific form, and a judge's signature doesn't override either one. Today, who actually gets the kids at tax time? The form that transfers the claim, what that form does not transfer, and the new alimony rules most people still have backwards. Start with the master rule, the custodial parent. To the IRS, that's not who has legal custody on paper. It's the parent with whom the child lived for the greater number of nights during the year. Count the nights. That parent claims the child by default. Dead even split? The tie goes to the parent with the higher adjusted gross income. Simple, mechanical, and completely indifferent to what the custody agreement says. So how do decrees that alternate years actually work? Through one piece of paper. This one. Form 8332. Release of claim to exemption by custodial parent. The custodial parent signs it. The non-custodial parent attaches it to their return, and the claim transfers. That year, specific future years, or all future years. This form is the bridge between what your decree says and what the IRS will actually accept. No signed release, no transfer. That's the whole mechanism. Now the detail that even divorce lawyers get wrong. What Form 8332 actually transfers, and what it doesn't. Straight from Publication 504, the form does not apply to the Earned Income Credit, the Child and Dependent Care Credit, or Head of Household Filing Status. Those stay with the custodial parent, the night's parent, no matter what anyone signs. So a signed release can send the child tax credit across town, while the EITC and head of household stay home. Two parents, one child, and both can walk away with real tax benefits, legally. Let's say, for tax year 2025, mom has the kids 220 nights, she's custodial. The decree gives dad the claim this year, and mom signs the release. Dad attaches it and takes the child tax credit, up to $2,200 per child. Mom, meanwhile, still files head of household with its bigger standard deduction, still claims the dependent care credit for after-school costs, and, if her income qualifies, still claims the EITC. Nobody broke a rule. The benefits were designed to split exactly this way. What happens when both parents claim the child anyway? We covered the collision in our fake dependence video, but the divorce version deserves its own warning. The second e-filed return bounces, the IRS sends letters to both households, and if neither backs down, it audits and decides using EITC rules, the nights count. The parent the decree favored can absolutely lose that audit if the nights don't back them up. Then comes repayment with interest. If your decree and your calendar disagree, fix it with a signed 8332, not with a race to file first. Now the money rules between the adults, because these flipped a few years ago and half the internet still has it backwards. For any divorce or separation agreement executed after 2018, alimony is not deductible by the person paying it, and it is not taxable income to the person receiving it. Straight from Publication 504. The old deduct-it/report it system you remember from older articles only lives on for older agreements. New agreement, new rules. The payer pays with after-tax money. The recipient banks it tax-free. Child support is even simpler, and it has never changed. Child support is invisible to the tax return. The parent paying it gets no deduction, ever. The parent receiving it reports no income, ever. Any preparer or app that suggests otherwise is wrong. And since the money is invisible, it also can't be leveraged. Paying child support, by itself, does not buy the right to claim the child. Only nights, or a signed release, do that. Quick filing status note for the divorce year itself. Generally, your marital status on December 31st controls the whole year. Divorce final by New Year's Eve? You file as single, or, if you kept up a home for a qualifying child, head of household, which is meaningfully better. Divorce not final? You're still married in the IRS's eyes, choosing between joint and the separate status we broke down last video, including that EITC exception for parents who've been living apart. The December 31st line decides which video applies to you. Your action list. 1. Count the actual nights. A calendar app or custody journal settles this before the IRS has to. 2. If the decree alternates years, get Form 8332 signed. The decree alone won't survive an IRS challenge for newer divorces. 3. Remember what never transfers. EITC, dependent care, head of household belong to the night's parent. 4. Check your agreement's date before doing anything with alimony on a return. And 5. If the other parent claimed the kids wrongly, don't panic race. File your correct return by paper if needed, attach your proof, and let the Knights rule work for you. Quick recap. The IRS ignores your decree and counts Knights. More Knights makes the custodial parent. Ties go to higher income. Form 8332 is the only bridge that moves the child tax credit claim to the other parent, and it never moves the EITC, dependent care, or head of household. Both parents' claim collisions get decided by the Knights, not the paperwork. Alimony flipped for post-2018 agreements. No deduction, no income. Child support was always invisible. And December 31st sets your filing status for the whole year. One quick note on who makes this. The tax breakdown is prepared by a tax accountant with over 15 years of public accounting experience, and this video is checked against IRS Publication 504, the Divorced and Separated Rulebook itself. Educational always. Advice for your specific situation, never. And in a divorce, your attorney and your tax pro should be talking to each other. Bottom line. In a divorce, the tax rules don't care who won in court. They care where the child slept and what got signed. Count the Knights. Use the form. Know what stays with the custodial parent, and both households can leave tax season whole. If filing status is your next question, are married filing separately and head of household videos are the perfect companions to this one. This is general education, not advice for your situation. Divorce taxes genuinely need a pro. Subscribe to the tax breakdown for taxes in plain English before you file, not after you overpay.